Okay, so in this section, I'll be talking about the psychology behind managing winning and losing trades. And this is one of the most important parts of trading. And this is basically your emotions during a trade, not before or after, but during a trade. So during a trade, you should be holding your winning trades longer. Fear of losing profits can lead to prematurely closing winning trades. Again, this is something you want to look deep into and yourself. You want to reflect on yourself. If you're a fearful person, you want to try improving on holding your winning trades longer to maximize your profits so you can cover more losses. Think of it like that. Confidence in a trading strategy and analysis supports holding winning trades longer. All right, you need confidence, and this confidence comes from winning a lot of trades through market experience. This comes with time. Allowing winning trades to run can lead to larger profits and maximizing returns, which in fact can protect and create cushioning for your losses. This requires patience, trust in the trade setup, and a focus on long-term profitability, which is all built upon confidence from countless time dedicated to this craft, just like anything else that you want to do in life that you have a passion for. For example, sports, um, any professional industry, there's countless of hours and time dedicated to it, no matter what it is. So you want to treat trading like a professional job, professional business. You need to treat trading seriously. Can't be goofing around and messing around with trading. Now that's something sure later on in your journey as you find consistent profitability. I will say it is much easier since you have already gone through the down period of trading, the learning curve. You've gone through the worst of the worst that can possibly happen to a trader. Then you see these people living these magnificent lives and having fun and goofing around while trading. The reason why is because they've already gone through. They have already gone through depression. They have all gone through all of these down times that a lot of new traders, even first 2 years, will go through. So you don't see what they've gone through on the inside. You only see on the outside. So it's something you really want to keep in mind. This is why also I say you should not be comparing yourself to others. You don't know what others have gone through to get to the point where they are at today. So something keep in mind. All right. Next thing is cutting losers faster. I wouldn't really say cutting losers faster. I would say just have a good stop loss for this. You don't want to really cut your loss before it hits your stop loss. You want to set your stop loss at a place where your trade idea is invalidated. And this is something that again I went over in the technical trading where to place your stop losses, so you guys already know about that. But so I would just not really name this cutting losers faster. Cutting losers faster is mainly for those that don't have a stop loss at all. You don't want your losses to keep on running. You want to just cut them quicker. But I would mainly say you want to have tighter stop losses where the play is invalidated. So the play is invalidated here early on. You should just get out the trade rather than being hopeful for a reversal. Because being hopeful does not mean anything. The market again, this is not a two-sided relationship with the market where the market cares about you. You care about the market does not care about you. Okay, that's how it works. That's the reality of trading. So emotional attachment to losing trades can result into again holding onto them in the hope of a reversal. Accepting and managing losses is an essential part of trading, and setting predefined stop loss levels helps in cutting losses before they escalate. That's exactly what I'm talking about. Adhering to risk management principles protects trading capital from substantial losses, and recognizing when a trade doesn't align with the original analysis and swiftly exiting is key. Emotional detachment from losing trades allows for a clear and objective assessment of market conditions, and a common false myth people believe in is that price cannot continue in the same direction and has to come all the way back to their entry so they can at least break even. But that's not always how the market moves. There are times where you just did not catch the top. I'm sorry, you didn't catch close to the top. Price could still be continuing nowhere close to the top, and you're just screwed at that point. So not only does this result in major loss again, but also ruins your mental and most importantly your risk reward system. You want to stick with your strict risk reward system. This way you can have a consistently profitable system. You don't want to be holding on to your losers way past your stop loss. What this does is this messes up all your winners that you had, messes up the data in your system, and just creates a mess for your future trades. Because at this point, your average winning or your average loss is not the typical 1-to-3 risk reward ratio. One massive loss can literally bring it down to 1-to-1 now. So definitely something you want to take care of and fully understand. Better to cut your losses early than to cut them late. Think of it like this: when you cut your losses early, think of cutting losses, or not even necessarily again cutting losses early, but having smaller losses equals money, because the less money you lost or you lose, you're actually you're preserving more capital. So the more money you lose, you're preserving less capital. So let's say you have a small loss, you just need a small gain to make it back. But if you have a major loss, you need a big gain to make a big win just to break even sometimes. So definitely something you want to take into consideration as you're day trading or even swing trading.